Hello everybody. How you guys doing? You having fun? Okay. So we're gonna make this easy on everybody. We're here to talk about what you want to talk about. What is really interesting. So before anything, how many people trade gold over here on regular basis? Wow. Okay. Beautiful. So I guess this is gonna be really interesting for you guys. So let me introduce myself quickly. My name is Amgad Attia. I'm the director for Tradeview. I'm based in New York. I've been in this industry for over 20 years. I've regulated in the US, and personally I've got my Series 3 and 34. I've been in this industry for quite some time, and I want to give you an insight, from a different perspective. I know there's not a lot of American companies over here. There's not a lot of American speakers. So let me give you an insight into what goes in the mind of a lot of people there, and what influence this would have on the gold market. So let's just give you a quick introduction of who we are, before we move. So Tradeview was established in 2004 in New York by our founder, Mr. Tim Fury, who is here with us. We have over 200 employees across the globe. We are regulated in many reputable jurisdictions, including the MFSA, the SEMA. We are also working on our FCA regulation, and more importantly, we are being regulated here in the United Arab Emirates under ESCA. So very soon we would have our ESCA regulation, and we will be able to provide services for our clients here in the UAE. So, Tradeview is one of the sponsors for the Leicester Tigers. I don't know if anybody knows rugby here, and I'm assuming some people from India would probably know rugby. So we are sponsoring of the Leicester Tigers, the champion of England, among other sports teams that we sponsor. So, like I said, Tradeview is a one-stop shop. If you're interested in stocks, real stocks, if you're interested in FX, gold, commodities, indices, whatever you need, we provide you all in one platform, or two platforms if you want to trade real stocks, and we would be able to help you. We excel in customer service, we excel in the products we provide, so we would be able to provide you with all what you need. So, like I said, we have over 5,000 real stocks that you can trade on our MT4 and MT5. And these are real stocks, not CFDs. You own those stocks, you collect the dividend, you pay the smallest commission. So if you're interested, come and see our booth 71, and we would be able to help you more in what you need. So let's talk about gold. If you look at the last year or so, you would notice that gold have seen, a really big spike in interest from everybody. Why? For many reasons. We all see the geopolitical events that are taking place. We see the wars around us. We're not far from anything that is happening here. We also see the inflation that hit the globe. All of this have really increased the interest in gold. We see the sanction against Russia. The tension between the United States and China. When the Russia-Ukraine war took place, a lot of the countries that scared that they could be next, they could be sanctioned by the U.S. government, they could be stopped from doing business through the SWIFT system. All of this have contributed to an alternative reserve currency, so to speak. So what did people do? They went primarily to gold, for traditional investment, and some people went to crypto. But in terms of central banks, they cannot really do a lot of crypto, so they really had to go to gold. So if you look at this chart, this is a chart of gold in 1 year. When I was here last year, I believe gold was at 1,800, and some people asked me, do you think we're going to hit 2,000? 6 months later, we are close to 2,700 in gold. So it's really a sharp increase. And with the sharp increase came the more interest from traders like you. Why? Because gold became the instrument where you can make a lot of money in such a short period of time. But of course, as with opportunity comes risk. So as much as the interest in trading gold, provides profitable trades, it also could be dangerous to you if you don't manage it properly. So like I said, we've seen this sharp rise in gold, $1,900 to $2,700 in less than a year. It became the most traded instrument. When I talk to clients from everywhere, everybody wants to trade gold. Nobody wants to trade anything else. Why? Because you get $30, $40, range in one day. So with a small position, you could make a lot, or could go against you. But with the predictability of the geopolitical trouble, with the inflation still raging in many places, a lot of people were long gold, and a lot of people made money. But I think we're getting close to the peak. But we will talk about this. So why is the U.S. election important to prices of gold? The U.S. economy is the biggest, and the person who is in the White House, not just the White House, but also controlling the U.S. Congress. In the United States, decisions politically are not just done in the White House. There is a balance of power. There is a part that the Congress has to implement. There is a part that the president has to implement. So a lot of people put focus on just the president, but he's not the only person who can make decisions. When it comes to making financial decisions, the U.S. Congress and the control of the U.S. Congress is a lot more important in this field. So, what are the options that we have? We have basically two options, either a Republican president or a Democratic president. So what do these guys do traditionally? So Republican traditionally controls spending. Okay, they don't like to spend much. They don't like to increase the budget deficit in the U.S. So they're going to try to help lower inflation, strengthen the U.S. dollar. A Republican president is more likely to reduce also the geopolitical trouble. You got to understand that a big part of this price increase we've seen in gold is a risk premium. When you have big events like what we're seeing around us, gold will rise just because of the risk premium. So if those conflicts, so to speak, are resolved, whether it was in Ukraine or around us here, expect the gold to come down. Why? Because the risk premium will decrease. And this way, the prices will start to come down. So if Mr. Trump wins, I think gold will start to come down if he is able to reduce inflation, reduce the geopolitical tension that we're seeing. What happens if Ms. Harris wins? A Democratic president and Congress probably will increase spending, raise taxes in the U.S., and inflate budget deficit. This will technically increase inflation because you are printing money basically without having any real production. So a Democratic president also is less likely to decrease geopolitical tension. This probably will have a positive effect on gold prices because, as we can see around us, it doesn't seem that the Biden administration is able to curb in the conflict that we see around us. And every day we see gold prices going higher, or at least remaining higher than they should be at the moment. So generally speaking, the expected gradual drop, the third element in this, because people look at just the election, but you also have the Federal Reserve, because the Federal Reserve makes the monetary policy. Congress and the United States President make the fiscal policy. So both fiscal and monetary plays a big role in making, in determining not just the exchange rate for the dollar, but also the exchange rate for the gold. So as we can see, the Federal Reserve, as everybody knows, starting to cut interest rate. Cutting interest rate will be negative for the US dollar. That's traditional wisdom. But this negativity on the US dollar will reflect positively for the gold. So it's really a very delicate balance between geopolitical tension, inflation, cutting interest rate. So the next few months are going to be really, really interesting. As we all know, Mr. Powell, we already cut interest rate. We have a meeting coming in October. Let's see if Mr. Powell is going to cut another 0.25% or 0.5%. So, excuse me, we will get to know this. So overall, in my opinion, gold will continuously to go up moderately, at least in the near future. We have inflation issues in the US and globally. Anybody here can see, you can go to the supermarket, and the stuff that you bought before Corona for 5 dirham, it's probably now 10 dirhams. the same concept happening all over the world. It's not just in the UAE or in India or in the Middle East. It's everywhere. You know, inflation is really hurting everybody. So as inflation continues to remain elevated, gold prices will remain elevated. It's the hedge against inflation. You know, as the political struggles that we see are taking place, you know, the general sentiment of the market is also supportive of gold pricing. You know, everybody is interested in trading gold, and that makes gold really a lucrative trade. Central banks are buying gold. So overall, I think we are going to see gold prices elevated for the near future. You know, probably going to be between the 2,500, 27, 20, you know, I don't think we're going to cross the 3,000 unless, God forbid, something really bad happen in the next few months, which I hope for the sake of everybody that it doesn't happen. So, you know, basically this is the main things that we expect to take place in the next few weeks. If you are trading, main thing I can advise you, please watch your risk. Don't be complacent with your position. If you think gold is going to move at certain, you know, to a certain point, please make sure you work with stop loss. Make sure you choose a reputable broker. You know, it's choosing your right broker, choosing the right relationship with the broker that you have is really vital for your success in trading. It's not just about your ability to analyze the market, but it's your risk management tools. It's your ability to understand not just the chart and what the chart shows you, but also understand what's the market sentiment. You know, if gold prices are moving in a certain way, if it's trending, do not stand against the trend. Remember one thing, the trend is your friend. So don't try to go against the trend. If gold prices are up or gold prices are declining, go with the trend, because usually this is how, you know, most successful traders are able to stay in this market. I would like to thank you for your time, and I would like you to, if you have any questions, please stop by at booth 71. We would love to meet with you, the Tradeview team. We would be able to answer all your questions. And thank you again for listening, and wishing you all good luck.